first day of the year and the markets are down. And this is not just a one-day thing. Actually, you can see that the S&P 500 is down by almost 3% over the past month. What I'm trying to say is that the market is currently very volatile, and adding to that currently it is also extremely overpriced, I fear that 2025 won't be a great year. Now, there is one company that a lot of super investors are currently buying and which has been rising very steadily in price over the past 10 years without any major disruptions, and that company is of course Visa. And actually, if we have a look at Visa, we can see that over the past year it is up by 21.45%, and if we compare it to the S&P over the past 10 years, we can see that it has beaten the market by more than 100%. So jumping straight to our stock valuation spreadsheets, we can see that Visa is a dividend company and they have a low starting dividend yield of 0.75% with a low trailing free cash flow payout ratio of 20.32%, which makes me very happy as it means that they can still direct a lot of their free cash flow into innovation, share buybacks, increasing that dividend and paying down debt. Now let's jump straight to the fundamental 9 pillars, and we can see that Visa gets a rating of 7 out of 9, with the 5-year P ratio and the 5-year price to free cash flow being the only 2 pillars in the red. Visa's average 5-year P ratio is sitting at 29, which means that they would be overvalued compared to the earnings they generate. But what you have to understand is that Visa is a premium company and therefore they can have a higher PE ratio. And that is the same case with the price to free cash flow, as Visa is a one-of-its-kind company. Investors are willing to pay more money for a single dollar of Visa's free cash flow. Now, something I really love about Visa is their double-digit growth. We can see that their revenue has been growing on average yearly by 10%. Their free cash flow has been growing by almost 20%, and their net income has been growing by 16.14%. Now, not only has Visa been growing their profits, they have also been growing their dividends. So if we zoom in to pillar A, the consecutive dividend growth, we can see that Visa has been growing their dividends at a rate of 12.22% yearly over the past 5 years, which is quite higher than the average company dividend growth, which certainly makes up for their low dividend yield of 0.75%. And so their high consecutive dividend growth makes them a great company for investors that want to achieve the dividend snowball effect. Now, jumping back to the 9 pillars, we can also see that Visa has a very high 5-year profit margin, even compared to its sector, sitting at 97.34%. They also have decreasing shares outstanding at a rate of 1.80% yearly, and low long-term liabilities over the 5-year free cash flow negative dividends ratio, sitting at only 0.48, meaning that they do generate enough free cash flow to cover all their long-term liabilities in about 2.5 years. So Visa's fundamentals are looking very well, but now let's calculate its intrinsic value. So jumping first to the Graham's formula revised, after plugging in the 5-year earnings growth estimate at 13.70% yearly, we get an intrinsic value of $291.40. For the second valuation model, after calculating the future free cash flow growth rate of 15.7%, we get an intrinsic value of $533.02. For the third valuation model, we compare Visa to MasterCard and get an intrinsic value of $384.20. And for the final valuation model, we take Visa's dividend growth, and using our alternative model, we get an intrinsic value of $305.02. And finally, averaging out these 4 valuations, we get an intrinsic value of $378.41, which is 20% higher than the current trading price, and with a margin of safety of 15%, we get an acceptable buy price at $321.65. Now, based on this valuation and the research I did in the backend, I do believe that Visa will outperform the market in the years to come, and especially in 2025. And with that, if you did enjoy the video, consider leaving a like and subscribing, as it really helps me out.